Hi everyone, James Comblo here, President and CEO at FSC Wealth Advisors, and it's Monday, April 7th around midday. And as of now, the S&P 500 has rallied 4% off of its lows from the overnight session. And I just wanted to break it all down, help you make some sense of what's going on and why it's happening. But before we jump into the actual environment, I wanted to start with a quote that I think is really poignant for this moment. So this is a quote from Dean Witter, who was a legendary investor starting in the 1920s. And he made this comment during the Great Depression. So it says, all of our customers with money must someday put it to work into some revenue producing investment. Why not invest it now when securities are cheap? Some people say that they want to wait for a clearer view of the future, but when the future is again clear, the present bargains will have vanished. In fact, does anyone think that today's prices will prevail once full confidence has been restored? Let us face it, these bargains exist only because of terror and distress. And when the future is assured, the dollar will have long since lost its present buying power. It takes courage, of course, to be optimistic about the country's future when nearly everyone is pessimistic. But it is cowardly to assume that the future of the United States is in peril. That was Dean Witter in 1932, which I believe was the all-time low during the Great Depression. And so I want to start with the basics, right? The tariffs. These aren't traditional tariffs. They're more like an aggressive negotiation tool, which should be a shock to nobody when you look at who our current president is. I just heard somebody call them motivational expenses, right? And so the numbers like a supposed 90% tariff from Vietnam don't actually reflect taxes at the border. They're derived from a combination of trade imbalances, currency manipulation, and the relative lack of goods that we import from countries like Vietnam. And so again, using Vietnam as an example, we import around $136 billion worth of goods, but they only buy about 13 billion from us. And the idea that they could even the score, if you will, is mathematically impossible given their economic scale. So what Trump is doing, in my opinion, is sending a shock to the system. I think he's doing it on purpose. I think it's a move to get other more important countries back to the table and renegotiate some fairer terms on behalf of the United States. In the industries like apparel, which rely very heavily on overseas manufacturing, they're getting hit hard, right? But again, it's not about punishing small countries. It's about setting a new baseline for trade with the world's largest economies. And so the question is, can this work? And, I don't know. I would say possibly or maybe, but we've never seen them utilized like this. One thing and so I'll say I hope they work, right? Because I always hope whoever the president is and whatever they're doing on behalf of the country, I always hope that it works for us. But we've already seen headlines that countries are coming forward. They're ready to renegotiate. I think Trump, in my opinion, is trying to play the long game. So he's not worried about what's happening today in the market. But I think he does want to bring back key industries like auto manufacturing, pharmaceuticals, and heavy equipment. And really, if the pandemic taught us anything, it was how fragile those global supply chains are, especially when we rely on geopolitical rivals. And so you've heard me say it 1,000 times, when in doubt, zoom out. And so let's zoom out for a minute because tariffs they're not the only story that's happening today. And this is what real bear markets feel like, right? They come for everything, meaning the bears. There are no survivors. That's just how they go. And as recently as last week, there were still a lot of pockets of strength. Things like financials, European markets, right? They were all holding up just fine. China as well. But then Friday hit. Countries like Germany, the Spider Bank Index, they got absolutely crushed, right? Now they look like massive failed breakouts across the board, and the bears have finally come for the leaders. And what about things that we've historically called safe sectors, right? Things like healthcare, staples, real estate, utilities. These are all the names that you see doing well in rough times in the market. And more recently, they've shown a lot of relative strength. All year long, they've been doing exceedingly well, and we've owned them in our portfolios. Well, they're now getting dragged down too. Low volatility stocks have had their worst week since the pandemic lows. You might be thinking, hey, what about gold and silver? Well, even those shiny metals got hit last week. Crypto had been showing some resilience, right? Bitcoin was holding up a lot better than many equities, but that all ended last night. It was really a sea of red in the entire crypto complex. There's just really nowhere to hide right now. And so what does it mean? It means that, in my opinion, we're in a bear market. Maybe not that technical 20% drawdown. I think the market's down 15% as we speak, but it may be a little bit rough for a while. And I'm not talking about 6 months, a year, 2 years, maybe the next month and a half. We're a little bit rough, but it also means that we could be very close to a tradable low, right? There's nothing left to break down. The bears have already taken everything out. And so here's the encouraging part. I like the action in the futures market heading into today. Stocks have already clawed back a ton of those losses. The S&P is up over 4% from the lows, and that could be a signal that a big bounce is coming right around the corner. But if we jump back to the tariffs, the move is less about the numbers and more about negotiation. And again, this is just our opinion, but I believe it's a reset. There is a path forward for countries and companies willing to come to the table and negotiate, right? He's the master of the deal. I don't think he'll pass up an opportunity to go on a victory lap and say, hey, look at all these great deals that I negotiate on behalf of our country, right? So I think he truly is open to that negotiation. But from a market standpoint, all this creates massive uncertainty, right? And so you've heard me say it before, the market hates uncertainty. And we don't know how these policies will play out. And that's what's causing all of the volatility. The bond market is panicking, is not panicking, right? Yields are falling and spreads remain tight. And so for now, it's more of a wait and see approach than a run to the exits and fear approach. But even the Fed is reacting, right? There's now a 23% chance of a rate cut at the next meeting, which is more than double what it was just a few days ago. The CME FedWatch tool is now projecting up to 100 basis points of cuts through the rest of the year, right? So that means a 1% cut this year. Well, I've said it a lot of times in the past, the Fed doesn't make the rules. They follow the bond market, which is considered the smart money. The bond market has already lowered yields, and I think the Fed will now follow suit. One last thing, though, is don't underestimate how behavior shifts under pressure. If Nike sneakers double in price because of tariffs, people will most likely stop buying them, right? That changes the inflation expectations, and the Fed knows that. And so I think that's a little wrinkle that may actually allow the Fed to cut rates. And because they focus on what people actually spend, not just what something could cost. And so what now? We're telling our clients, I'm telling you, stay focused. Our models have already shifted into defensive sectors. We're holding cash coming into this. We're looking at adding more cash if the opportunities, present themselves. But we want to let the strategies do what they do best and adjust in real time. We want to stay calm, stay resolute. Between our bucketing strategies, our tactical portfolios, and our long-term investment philosophy, we're making the appropriate adjustments. But as always, please reach out if you have any questions, thoughts, or concerns, and you want to talk through your specific portfolio with us. I hope you're having a good day. I look forward to speaking with you soon.